How in the world does a company report its best quarter in history and, almost in the same breath, have one of the worst days ever on the stock market? It's a wild paradox, and today we're going to unpack it. Because the answer reveals a massive, high-stakes bet on the future of technology itself.
So on one hand, Meta just came out with a spectacular third quarter. We're talking revenue that absolutely smashed all their previous records. But on the other hand, the market's reaction? It was a complete meltdown, wiping out a historic amount of the company's value in a matter of hours. A tale of two totally opposite records.
So the big question is, what went so wrong, right? How do you go from record-breaking sales to a record-breaking sell-off? Well, the answer isn't in what Meta did last quarter. It's all about what they're planning to do next. Let's break it down. Okay, so first things first. To really get why Wall Street was so shocked, you have to appreciate just how unbelievably well Meta's core business is actually doing. This is not a company that's in trouble. This is a company that is absolutely firing on all cylinders. I mean, look at this. The headline number is just staggering. Over $51 billion in revenue in just 3 months. That's a 26% jump from this time last year. Growth like that at this kind of scale is almost unheard of. It just goes to show you the advertising engine behind Facebook and Instagram is stronger than ever.
And here's why they can do that. 3.5 billion people. That's billion with a B. That is nearly half the entire planet using a Meta app every single day. Their global reach is just on another level.
And check this out. It's not just that they're actually growing faster. The revenue shot up from $34 billion 2 years ago to over $51 billion now. That acceleration you see on the chart, that signals a business with some incredible momentum. And when you pop the hood, all the parts of the engine are humming along perfectly. Reels, their answer to TikTok, that's on track to bring in over $50 billion a year. Their automated, AI-powered ad tools are pulling in over $60 billion. And here's the really important part. They're not just showing more ads, they're getting paid more for each one. That is the textbook definition of a healthy business.
So, with a report card that good, you'd expect a party, right? Champagne corks popping. Instead, Wall Street hit the panic button, triggering one of the biggest single-day stock market losses, ever.
Just look at that number. Seriously, try to wrap your head around it. Right after reporting its best revenue quarter ever, Meta's market value plummeted by $237 billion. That is more than the entire value of huge, household-name companies. Just gone, vanished in a few hours of trading.
Okay, so what is going on here? How do you explain this disconnect? Well, the mystery isn't in the revenue column. It's actually buried in their expense forecasts and the company's incredibly ambitious and frankly, terrifyingly expensive vision for the future.
Now, real quick, let's get one thing out of the way. You might have seen some headlines about Meta's profits collapsing. That was because of this huge one-time tax charge. It's just an accounting move. It's not a fundamental business problem. If you take that away, their profit would have been a massive $18.6 billion. So that's not what spooks investors. The real story is about spending.
And here it is. This right here is a slide that caused the panic. It shows the absolute explosion in capital expenditures. That's the money Meta spends on stuff like AI chips and data centers. It jumps from $28 billion just 2 years ago to a forecast of up to $72 billion. And for next year, all they'll say is notably larger. This isn't just a spending increase, this is a spending spree of epic proportions.
So what's the justification? Well, Mark Zuckerberg is making a very bold argument. He's making a massive bet on achieving superintelligence. That's AI that's smarter than humans. He's basically saying it's better to overinvest right now, so that whenever that next huge tech shift happens, Meta is ready to dominate.
But you see, Wall Street has heard this song before. And as these analysts pointed out, this feels eerily similar to the company's multi-billion-dollar pivot into the metaverse a few years back, a gigantic spend on a futuristic idea with no clear way to make money from it. That memory is exactly what's fueling all this fear.
So this all boils down to a colossal gamble. It's this fundamental conflict between investing for a far-off, uncertain future and delivering the predictable profits that Wall Street wants to see right here, right now.
You can really frame this in two completely different ways. The bull case is that, hey, Zuckerberg is a visionary, he's seeing the next tech revolution coming, and he's spending whatever it takes to win, securing Meta's place at the top for decades. But the bear case? It's that he's chasing another expensive dream, burning through billions of dollars on an unproven concept and destroying shareholder value along the way.
So we're left with this one central question. Is this historic spending spree the necessary price of building the future of intelligence? Or is Meta just repeating its most expensive mistakes all over again? Right now, that record-breaking advertising business is paying for the whole thing. But the trillion-dollar question that Wall Street is screaming is, for how much longer?